Hi, I'm Tom Lydon, editor of ETF Trends here in Hollywood, Florida at the Inside ETF Conference. And I'm here with Jillian DelSignore and Bob Deutsch from JPMorgan. Folks, thanks for being with us.
Thank you.
Absolutely.
JPMorgan has such a great long history, and now through your smart beta or intelligent beta ETFs, people can get low volatility and high quality through what you folks are offering. Tell us a little bit about your relationship with advisors and how you're growing them today. Jill?
So I joined about 4 months ago into JPMorgan, and we have been really focused on building out our sales team so that we can really be out in the field in a meaningful way, partnering and building relationships with advisors to help them think through how to implement the JPMorgan diversified equity return ETFs and really think together about implementation to try to help them through a lot of these volatile markets.
Yeah, and Bob, it's been a pretty good bull market in stocks and bull market in bonds, but now we're seeing a lot of volatility, and in talking earlier, you're spending a lot of time with advisors helping them implement kind of this low vol strategy.
Yeah, absolutely. Well, it was a pretty good bull market in stocks and in bonds, and we saw a lot of volatility last year. From the standpoint of smart beta, I mean, it was an interesting year because advisors were able to look at different smart beta products and see if they performed as designed through volatile markets. So we're having a lot of these conversations with advisors whose clients want to participate in the equity markets but don't want all the volatility of the equity markets, and that's the conversation we're having with them.
Yeah. Now, JPMorgan not only has great advisor relationships, but institutional relationships as well. And there are institutions that are also adopting ETFs too, is that right?
Sure, no, absolutely. There's a big institutional market. Now, we've been focused more on advisors and the institutions like strategists who service advisors. So. Yeah. We're very focused on building out the relationships with advisors. Our products, we think, are well suited for advisors, and we're starting now to build out our sales team because we just find we need more people to be out talking with advisors, building those relationships, and of course we're leveraging our broader mutual fund client advisor team who know these advisors in many cases very well.
Absolutely. So, Jill, initially all the money that was flowing into ETFs over the last 20 years, a lot of it came from actively managed mutual funds, but now there are a lot of ETF-centric advisors that are shifting their allocation from pure beta to more intelligent type indexes. Is that the case?
I think it is. I mean, that's certainly what we're seeing. If you look at the statistics, there's been some pretty phenomenal numbers. Upwards of 60% of advisors in the last year have implemented some sort of strategic beta strategy, and almost 100% have indicated that they actually want to begin using them. So from a relationship perspective for us, we want to be out there and talking with advisors, getting our sales force out there talking with advisors, building relationships and helping them understand how to really think about strategic beta ETFs. There's a lot of them out there and there's a lot more entering the market, and we want to be able to help them through due diligence and implementation so that they're making the best choices for their clients.
What advisors are finding, so there was some conversion from mutual funds to ETFs. I think now you're seeing within ETFs some recognition that there are flaws in traditional index strategies. And the smart beta strategies in some cases mitigate for those flaws and provide an interesting complement to the traditional.
And I think your point is right. It's complement. It's not always A or
right.
B. It's kind of how do they all work together.
Absolutely.
And your team works with advisors to help them with portfolio construction ideas. Right. So one of your most popular ETF strategies, JPIN, tell us a little bit about that, Bob, and how that's a little bit different than what else is out there.
Yeah, JPIN or JPIN is our international developed product, and it's different in that it has two aspects to it. So it uses multi-factors to select stocks. There are other ETFs that do something similar, but in addition to that, it has a risk framework that mitigates one of what we see as the flaws in traditional indexing, which is over-concentration in sectors. And so we reduce that over-concentration. It produces a different return stream and one that's less volatile than many active funds and the traditional indices.
And this really is part of the JPMorgan way they manage money. And now today, being able to get that great legacy of JPMorgan management within a simple ETF wrapper, it really is a testament to where the industry is, wouldn't you say, Jill?
I would, and if you look at some of the earliest adopters of our ETFs, they are clients who they understand that buying the JPMorgan ETF is another way to access the insights of JPMorgan, and they can access it now, to your point, in that ETF wrapper.
Yeah, that's great. Well, listen, thanks for spending time with us today. I'm always learning something, and enjoy the rest of the show.
Thank you.
Thank you.